back again with another new video this week, and today is Saturday already, and I will show all things that happened throughout the week from Monday to Friday, the trading opportunity that showed up in the market, and how price has been respecting my levels and how things have been going since Monday to Friday. Let's dive into the chart right now to show what happened for the week. Now this is my trading view account. This is my trading view, and the last thing that happened last week was price respecting this level here that I had already predicted that is going to happen 2 weeks ago, and last week that happened on I think on Thursday last week. That happened on Thursday last week. So after Thursday, the Friday, price moved back to this H4 structure. Then, since then, we'll be having a downfall of the price again into this daily structure. I pull out this daily structure of recent, and let me show how I get that. How I got that on the daily time frame. Now, this is what I saw on the daily time frame. I saw price after this impulsive movement. I watch this consolidation right here, and I look at the structure down there. Then this structure is well shown of the 4 hour, but is a daily time frame structure. Look at this price respecting that zone and price breaking the zone, then coming back to it before this whole movement up here. So I had this on the 4 hour, I had this on the 4 hour time frame. So this structure was in between these two levels, and the price can respect any of those particular places. Is a price is not actually what is going to happen, but I'm seeing what might happen in the market, and if price should get to those places and react to it, that is a very good thing for me. That's what I'm going to capitalize on, so that I can make what I'm going to make from the market. Now this is how I get the structure on the daily time frame down. Moving down to 4 hours time frame, we can see it boldly and clearly here. You can see, let me move down, let me move back. You can see this is that level, and look at our price snap into it again, then break and retest happened there. So that was where I was looking out for price after seeing this, after seeing price respecting this level on Friday. I was thinking about this on Friday. If price should hold on this level, I think price is going to, market is going to push the price downward if this H4 structure still holds the market, and that was what happened. Price held that structure very well. The market was pushed down. Look at how massive the movement was on Friday, Monday, and Tuesday. I think the whole movement gets here on Thursday. Yes, the whole movement get back to this D1, this daily structure on Thursday before respecting it again. That is what I've been preaching in all this video that I've been doing and putting out there. How market respect levels, how market respect structures. So all I need to do is to allow the price to get to the structure or the level that I'm expecting it to get to, look at the reaction, then move along with the market direction. That is all I do on gold and how I trade gold. So I trade GBP USD too, but this series focus on gold, and look at what is happening here. So by Monday, after market close on after the market closed on on Friday, I waited for Monday to see the market opening on Sunday evening / Monday. So I saw the price coming down because of this level was held on Friday. So all I need to do is to know the direction of the market, then I play along. So within this direction, I buy, I sell the impulsive movement, and I buy the retracement because I know market is going down. So that is what I do when I see this kind of movement. So what I did was move down the line, then go to my 15-minute time frame to see opportunities that happen for that particular week. So this was the whole movement that happened there on Friday. The price respected this H4 structure. Then the Monday morning, all what I'll be looking out for on Monday morning is for price to make it back to that level or to come into my point of interest. And the very first point of interest I'm going to have on this on Monday morning, or is this will be here, this will be there. That will be my first point of interest for the week. As you can see boldly, price get to that point of interest and respected that point of interest. So the only thing that will make me to go into this trade is to see market reaction at that particular point of interest. If there is no reaction, I let the market plays out. I will leave the market to do whatever it needs to do at that particular point before I go in. Now look at what happened. Immediately price pushed down from this H4 structure. Price was what consolidating, had an impulsive movement. You can see we had an impulsive movement and have this whole consolidation over the Asian session. Then before we have this push again into the point of interest. So price pushing with this massive movement into the point of interest is going to be a very good thing for us to look out for. Now look at the price momentum. You can see we had a whole green candle, 6 green candle with huge body candle and body candle body throughout that particular movement. And look at how price lost its momentum after getting to the point of interest that I'm expecting price to get to. Look at this 6 body candle, stop that movement and market start to range, giving doji and some kind of bearish movement candle. So once you're seeing this, you should have known, okay, this is the point at which I can enter. Sometimes I enter at this rejection, but most time I wait for price to make a very good movement before I go in. So far I'm still within my stop loss limit, which is 50 pips stop loss. Now I target 100 pips, 200 pips sometimes, depending on the market movement. You can see my 50 pips still lies within this place. So I would have entered this trade at the stop of this, because I won't want the price to go too far before I enter this kind of trade, because my target stop loss will be this high here. You can see I'm still close by about just 2 to 3 pips movement additional, or 5 pips additional movement, so that's fine. But the only thing I will looking out for is to sell this market at this point, because I know price respecting my point of interest is going to be a very good advantage for me to go into this market. Now, where am I going to go out of this market? That is one of the biggest questions that needs to be answered by all trader. Whenever you're in a trade, where are the points you need to go out of the market? So for me on gold, I target 100 pips, 50 pips, 100 pips, 150, then 200. So it depends on how the market moves, and I also look the structure to take the profit too. Like in this aspect now, the first place I'll be looking out to take this profit is at this level here, and look how that's aligned with my 100 pips take profit. That's fine. And the other places I'll be looking out for are all levels, are all feasible levels along the line. But the very first place I'm looking at to take this profit is at this point, and look at how my price and how the level aligned with the with my 100 pip stop loss, and look at what will make me close this trade. Look at the rejection and how markets start to respect that level before we have this push up here. I would have gone out of this trade with about 90 to 85 pips thereabout. Then I will just close the market and leave for the day, because it's getting late already. The London session is closing out in any moment from that time. You can see that is how I trade this section, and that is how I trade this gold. So you look at how the market is respecting your levels. Move down your time, move down to your entry time frame, look for possible setup, and look how market is respecting, how price is respecting that particular point of interest, that particular level you're looking to take a short. So once you see the reaction, then you go into the market with no fear. So far you are considering you're putting in place a good risk management system. So that is the first thing you're going to see on Monday, and that will be the only trade I will have taken on Monday. Now going back to Tuesday, all we have to do now is we are selling this market down into this level here, because that is the next possible place that we are thinking about where the market is going to end. Is it because it's a very big structure for us to look out for. So on Tuesday, the next thing we're looking for Tuesday also is to sell. Though I buy sometimes in this movement when I see the opportunity to just buy a very short movement, maybe the true retracement, then I buy little, then I capitalize on the sell aspect, because that's the main direction of the market. Now on Tuesday, the very first thing I'll be looking at for Tuesday is to look for the break of structure that happened on Tuesday, or late in the A session, or the the New York session the previous day. Now look at what happened here. We had a break of structure here early in the morning on Tuesday. We had this happening on Tuesday, early in the morning on Tuesday. So the very first place I'll be looking out to sell this market is this place. Though I would have had an opportunity to go into the market very first thing in the morning, because we had a break of structure here. Look at this structure was taken out early in the morning. That was around 6:30 thereabout to 7. You can see. So once this level was taken out, our very first point of interest would have been this candle, this OB here, and that is where we'll be looking out for the first trade for that Tuesday. And we had another one here too on that same Tuesday. That will have been our second point of interest for that day. So the very first trade, we'll be looking out to go out of this trade at this point here, because that is the first structure we are looking at for price to take out after this whole movement here. Actually, this will have been the first one, but this is small. But what I always do is this: whenever a price take out a level and I'm in a trade, I put that particular trade on break even in case the market moves against me, so just to secure myself from being hit out of the trade with loss. So this would have been put on break even. I'll enter this trade around this whole rejection here, then put my trade on 50 pips stop loss, then I target 100 pips. You can see, even if I enter on this big market here, because the only thing you need to do is the point at which the market might push you out. So that is why I always use the 50 pips to give room for markets to do whatever it needs to do at that particular point. Now entry into this market at this point too is not such bad actually, but if I enter here, anywhere I enter, either here or this point, my first place I'll be looking out to put my trade on break even is this level here. Once this level is taken out, I'll put my trade on break even. Then I look out for this level to take my profit. Once I see price reacting to this level here, I close the market, or I close 80% or 90% of that trade and put the rest on break even. So once price get there, you can see how price reacted to this point. We had a bearish movement followed by a bullish movement. After seeing this kind of candlestick formation on this level, you should know that something is going to happen at this particular point. The best thing is for you to trade is to close all your trade, or you take the majority of your trade out, then put the rest on break even. Boom, that was what happened here. You can see price get there and reacted to this point, then push back again. So at this point, this first trade is gone. Once it reached this level and reacted to this level, you're out of that trade already. Then the next possible place I'll be looking out to go into, to go into this trade again is this level here. After this structure was taken out, we had another point of interest at the hub there. Then the very first thing that happened was that, look at the rejections. Once you're seeing rejection like this on this particular, on your point of interest, you should know something is about to happen. Though you have to be in the right side of the market for you to know where exactly the market is heading to. So that was the first thing you need to put in place before even looking at your setup at all. Then look at this. After the rejection, we had our entry is going to be around here. They will target another 100 pips thereabout. But this 100 pips is just like, let me just see what is going to happen. But I focus more on the levels, on the structures. I focus more on the structure to take my profit. Look at how price react to levels before I close on the final, before I close for the whole day. You can see how price reacted to this level. So I would have seen this trade happening this way, but once I get my 200 pips, I'm out of the trade for that day. I always hunt for 200 pips maximum for the day. If I've gotten 200 pips on a single trade, I put that trade on break even on 200 pips, and if there's additional movement to that market, I take. If there's no additional profit, then I'll be out with 200 pips. So that was what really happened here. Look at how price played here. Push into this first one, broke it into the second one, broke it into this third one, breaks it, broke this one too, then pull back into it. So once I see this pullback happening, I'm going to close the trade. Boom. Then this is the place I'm going to just end this trade and go out with it. after this impulsive movement here, we had this whole consolidation. You can see after this impulsive, we had this whole consolidation happening in the market before this next impulsive movement again, consolidation again, impulsive movement. That's how market moves. Market moves in waves. So now the following day, which is Wednesday, let's check on 5 minutes. But on 15 minutes, there's no trading setup for me on 15 minutes. But let's check on 5 minutes to see what happened on 5 minutes time frames. 5-minute time frame for Wednesday. This is it here. So 5-minute time frame. No clear break of structure actually on Friday too. No clear break of structure. The only thing we had here was what happened within the Asian session. We had this break on this Asian session, but we can actually capitalize on that also. So for Wednesday, we'll look out for the possible trade setup on Wednesday to capitalize on the movement, on this bearish movement. So the very first thing we'll be seeing on Wednesday is this level that was taken out during the Asian session. You see that level was taken out, and we had our point of interest here at this particular place. So the very first thing I'll be looking on Wednesday morning is to see price respecting this point of interest, then moving, giving us the confirmation that price is going to move downward, and we go along with the market. So the very first thing that you will see here is to see a candlestick closing below, and that happened by 5:45 a.m. in the morning, early in the morning, so early in the morning. So let's say at that time maybe no trade was taken at that time. Maybe I was still sleeping or doing some other things at that particular point in time. So where exactly will you be going to this market? The only place you'll be going to into this market is to see, let me see my 50 pip stop loss. That's what I used to check first before I know where exactly I can go into this market. I can actually go into this market at this candlestick close here. I know it's huge, but it's still something very, very, very good and reliable enough to go into this market. You know the market is way far away from your entry. Boom. Look at, even at that entry at this particular level still gives 100 pips stop take profit, and that is massive enough for you to go with. So that's very good trade for you to go with. That's fine. So the next day, which is Thursday, we're still looking for the sell opportunity. We had this break of structure here within during the New Year's section and Asian section. Look at this. We had this break of structure here. Then we had this OB to be capitalized on. Once price respected that particular point of interest, then you go into the market, then you target your 100 pips. Then if 100 pips didn't come by, you look at your structure. Look far left. Looking far left is very, very important, and that will give you around 70 to 80 pips movement. That's fine for the day, and that happened during Asian session. If at all I'm going to trade this in the middle of the night, that is something big and huge for you to capitalize on. Then if at all you couldn't just trade during that period, there's another opportunity for you for the day. This is another opportunity for the day, and I believe this is a news reaction. This huge massive movement here would have been a news reaction for that day, which is on Thursday, 3 days ago. So the very first thing we'll be looking out for here is to see the market losing its momentum, price losing its momentum. As you can see, we had this strong bullish movement. You see, once the price gets to the point of interest, it started dropping that momentum and trying to consolidate within that particular level. Then seeing doji candle is something huge for you to capitalize on. That's what I used to do on gold. When I see that doji candle, I'm like, oh yeah, I think something is about to happen here. Then I capitalize on that movement. You can see this give about 150 pips thereabout into this into this D1 structure. Once I get my 150, put it on break even to see price is going to move to 200. So that would have been a very good shot for that day, if at all we are going to capitalize on that particular opportunity. So price moves and you follow suit. Don't do anything else. Move along with the market, so for you to capitalize more on that particular movement. So this is what has happened on Monday to Thursday, and on Friday No trade was taken on Friday. Why? Because the setup we had on Friday was not triggered. Because I was looking at price to come back into this point of interest here, then take us into the market, then we moved with the market, but nothing happened on Friday. The movement just left us behind and go boom. I think it was around 150 to 200 pips movement. I think so, 150 to 200 pips movement. Yes, 200 pips movement. Boom, just move away like that without taking us along. It's fine. That's how the price, that's how the market does sometimes. So we just need to just overlook that and wait for the best opportunity on Monday to capitalize on the market movement again. But for now, this is what is happening. Price has gotten to this daily structure. We traded this from Monday down into this particular level. So that's what I do. That's what I do. That's the way I follow the market. Once you let market get to your particular level, the main structural level you're looking for, let price get to those level, then you capitalize on that movement. That is what I do on this gold movement particularly. So that will be all for now, until we'll see better opportunity for us to trade on Monday. Then that'll be all for now.